everybody, and welcome to the stream. We hope you had a great weekend and you're ready to get into a Monday morning session in the US because, of course, we have Monday coming and it looks like it is all green, all good. Or is it? Because the stock market's opening up here with another gap on top of a gap. So we'll talk about all of that and more. Firstly, I want to ask the chat. Chat, what do you think about today? Is it bullish in terms of by the end of the day, or is it going to be a big red bear? Let me know right now in the comments, and let me know also very soon we'll have the stock of the week. We'll find out where you guys think the stock of the week might be. All right, well, let's get into, we'll use the SPX just firstly. Whenever you're doing analysis, even if you're using a futures market, always remember, everybody, we need to come back over here to the SPY or the SPX, the real market, and we need to understand, do we have gaps? Do we have areas where effectively markets might want to fill in a price that has been skipped? 41.08 was the close on the Friday session. Today we opened so far, coming into this session, 41.52. Where is the gap clean? So theoretically it closed up here at 41.76, but the big zone that everyone's going to want to see filled between 41.43 and 41.56. So it looks like it's kind of opening right on that level. So this is the gap zone that's getting filled in this area. Fairly predictable in terms of wanting to fill this upwards gap. The market's still actually in a bull trend on the smaller timeframes. We'll explain some of the concepts and thought processes behind that in just a few moments. Then we'll go through some of the key lead indicators. Obviously, we'll go through the Nasdaq. We'll go through some top stocks, all of those things in today's show. I'm still feeling bullish here, guys. I've got to say, let's see what everybody else says. They say, hey, all good. It's going to be good. Then it's going to be a bear trap, some people say. And then some people saying it's going to be a bipolar day. All right. Bullish and then doji. All right. And it's a trap coming through from quite a few people. Remember, smash that up vote as well. We've got 251. We're also going to try something a little bit different. I thought, why not bring in some tunes? So we were doing this in the private community this week or last week. And I thought, hey, let's bring in some tunes. So let's see if everyone likes this. If you don't, let me know. I'm going to add just a little bit of background music to make it just a little bit more chill. Okay. So hopefully that should be nice and quiet. We'll just leave that through there. All right, let's get stuck into this analysis. Straight up, what's going on with this trend? Trough, peak, higher trough, higher peak, higher trough, higher peak, higher trough, higher peak. So you can fight me if you want, but the 1 hour trend, as far as I'm concerning it, is up. Does anyone disagree with me in the chat? Do you disagree? Coming into this week, technically it is up. Someone calls this music alpha brain. I don't know if that's true, but I think that if you've got something going on in the background, it just cools you down. You know, some people listen to rock and heavy metal when they're trying to trade. I don't know how you guys do it. It makes me make some bad decisions. Yeah, you get a little bit angry, and then when you lose a trade, you might click too many buttons. But yes, it's currently in the upwards trend, at least on this time frame. So where are the key levels that we'll be looking at for this week? Well, I think we've got what we call a defended zone sitting around this 40.73. So let's just quickly mark that up. We'll mark that up here. And between, you'll notice I've got a green box between the low here and this area. Anything in here is what I call like mostly negative to neutral land. If we breach underneath, expect repicks. That is a market that moves back up and then shorts off to the low. So where do the bears start to win? Underneath this 40.80. Expect this area to be quite defended by buyers. So the market is currently moving up. We've got the higher peak. We're hoping that it might fill the gap, possibly a pullback, fill the gap that it's creating today, then rally through. And the general concept at this stage is a rally that goes towards 4,300. I noticed on YouTube, there were a whole bunch of spam botters saying, today is the day. 6th of the 6th, 2022, they said. It's the day that the market goes bullish to all-time highs. That's actually what's being posted in my comments at the moment. The bots are out going bullish. Usually they're talking about being bears. But now they're saying today is the day. I don't know if that's something that's going around the internet. But here is a level of supply or resistance that we previously saw. We currently have a little bit of a double bottom. So that is that the maximum pain was here. Here's a double bottom. If we just take that distance, We'll use just the normal low here, and we'll extrapolate that out. And that's how we kind of get to this price, maybe even a little bit higher. Let's think about what happened previously as well for anyone that's joining us for the first time ever. We have a concept of the fib, so the fib retracement level. What happened last time? Got up to a 61.8, went a little bit over, then it just got destroyed. So if this happens again, where does the 61.8 put us? Well, a 61.8 would put us just above these highs, effectively clearing that level. I think we've got to be very careful around here between the bulls and the bears. What are you guys doing at 4,300? Are you going to short or are you going to long? What are you going to do there? Gary says Apple WWDC happening today. Oh yeah, I forgot about those events. They used to trade so heavily off those events. It was awesome when they used to be innovative company with cool things. It was great. Random says there, I'm going short at that location. Everyone else is saying short, of course. All right. So just remember, if it comes into a zone like this, what are you looking for? Potentially you are looking for shorts. You may be looking to clear orders or clear levels. But I do think that you need to wait for confirmation that is some form of change of the trend on a smaller time frame around this zone. And then, of course, you hope there's weakness that comes back in, pushes it lower, and then we'll find out who wins. But for now, we're filling the gap. It's a little bit sad because this morning, when I was looking at the futures for me this morning, I was thinking, oh, yes, today we get to go bullish to fill our gap. Then the futures market went and did it without us. That sucks. I hate that. If you're not there and you're not already involved, when this futures market does this business, it becomes quite difficult. So what did we see on the Friday session? Well, here's the Friday session, the real market. We'll switch over to the futures now and we'll look at the futures market. I'll go back over to the Friday. I think everything changed on the Friday session actually here. So we put in a pretty nice base. This is the 1 minute chart. That was a very nice base. And the whole day we were basically shorting. We had that 41.42 zone, pretty key level, big shorts coming through that area. We then made a lower trough after making a lower peak here in the 5 minute and 1 minute chart, made another lower trough. We changed trend on this small time frame here, and then we changed it massively here. And then all of this was just Wall Street accumulating positions, effectively the composite man accumulating around this zone, pretty much put in the base on the Friday session. This, if you don't know how to read, base accumulation, that is a pretty classic case of a base being formed, of accumulation being formed. You've got your kind of max pain concept. You've got the defended zone concept. You've obviously got your standard Wyckoff accumulation concept, SOS, breach, pullback to grab liquidity, and then of course the rally through. So let's now have a look at what we've got coming into this session. What's it been doing? Well, this stage you're kind of having a bit of issues, a little bit of resistance around the top of that gap zone. So let's have a look at that on the market. Not much to look at, but certainly a little bit of resistance here. I do think the market would like to fill to the downside before rallying back up. That would be my general gist or concept. I find it hard to believe that if the market does keep rallying up and up and up and up, by leaving a gap here, the 4,300, let's say that the market makes a new peak today, breaks a new peak and keeps going up to 4,300, kind of convinces me that in the future, we'll have to turn back over and come back down and grab this gap that's forming here. It'll just sit there for too long. Paul Scaglia says, can you explain the composite man when you have a minute? I think maybe it's a good time for us to explain it. So the composite man theory, which was designed by Wyckoff, well, he really came up with this concept, was basically the theory like this, that the market is one entity. We think of the market as one entity. And if we do that, it helps our Cocoa Puff brains really understand the market a little bit easier. It's us versus them. And they're presenting certain things that they're doing. They're obviously manipulating the market. Yes, we already know that. They do manipulation. They're doing it in such a way where they have to leave footprints. So the whole point of understanding this idea of the market being one entity is, are they leaving footprints that we can then spot in these markets? So when we think of it like it's one entity, they usually have to accumulate position. To accumulate the position, they have to liquidate other people's positions, yeah? There's only a certain amount of stocks available at any time. How do they get involved in it? They want to liquidate other people's positions to get into the accumulation side. Similar to what they did recently, creating fear. And on the selling side, what do? Ramp the position up a few times while dumping the position simultaneously, and that they would leave footprints in that side. So the footprints become volume. Definitely subscribe to the channel. I'll be putting out a whole bunch of videos on this soon. I'm creating a new evergreen set. The first one's out today talking about rotation. Definitely go check that out. Did you guys enjoy that video? Was it any good? So the footprints are what we're looking for, the nasty traps. To put it in simple terms, which is something I teach in the mentoring, let me just give you the most simple footprint that you can ever see. All retail traders fall into this trap. When the market's going up, it rallies and rallies and rallies. The spread of the idea or the trend is very strong. Yeah, we saw that a lot in 2021. When is the best time for the composite man to dump? And I'm going to ask the chat this question. When is the best time for the composite man who has lots of orders, they have a lot of position, to covert ops style jump into the market and dump into us, the retail traders? What specific time happens a few times a year? Let's just say it happens a little bit. Would be a very good high volume day for us to destroy and get all of our orders, starting to liquidate all our orders at the peak. They're scaling out. Remember, they can't just leave. I think so many people think of the big fund managers and the big composite man concept as they can just leave. When you've got billions of dollars of orders, you can't just leave. Kathy Wood's probably proof of that. That's why it's bad. Why would they tell you what they're in? That's why in the US they love it, because they don't get to tell us for 3 months. People are saying quarter end, quad witching. Well, quad witching would be pretty cool. But I think Aliviku has it correct. Earnings. Earnings. Why would they dump into earnings? Because they can. Remember we say always the left-hand side, it's going up. Yeah, it's going up. Well, if the market's gone up 60, 70% coming into earnings, it's probably already cooked the earnings. Yeah, the left-hand side's shown us that. So where are they going to dump? They're going to dump into the earnings. They're going to dump on that thing. And you say, well, this doesn't make sense. The earnings was great. The earnings was great, guys. It's all great. Yeah, it is great. But the stock went up 60, 70% going into that. So what are they doing? They're actually showing themselves in that order. Now, I'm not going to go any further than that. If you're interested in it, of course, I would recommend you do our mentoring. But you can get the idea. So good question. Great thing. Gary says, at resistance or euphoric highs or quad witching. Well, in general, all of those things are big, but earnings is the one. A few people saying, are retail hypers coming back in? Certainly look like it. So at the moment, we're still bullish in trend here on the SPY. Remember, at this stage, in this current market with the VIX above 25, the SPY, that is the S&P 500, is the most important literal, if I could just say I just want one chart, guys, I'm going to have the SPY. The SPY. So when we go back over to that 1 hour chart, remember, we're still currently in an uptrend on the 1 hour. Even the daily has technically switched when it broke through here. The weekly, still downtrend, no doubt. Where's the 20 moving average? For the weekly, sitting here. So if you're a bear, you got to be nimble and quick at the moment. If you get underneath here, you can celebrate because that's bad for the market. But at this stage, I'm still a bit bullish tinged. That's just really what we're seeing in the order flow in the markets here. Peter Lenk says, whenever I buy call options, that's when they dump it. Well, yes, probably, because you get convinced at that point. You see the closure, you get convinced, it rallies, and you think, oh, I can't miss out any longer. You buy the call option. Whoops. Yeah, it's still a gap because it's still a gap of the previous 2 days ago. All right, let's quickly scroll through a few others here. So we've got the US 500. We see that little kind of 1 minute chart seems to be range bound. So for some traders, they're going to be looking at it. Looks like we're breaking to the upside, but this could be structuring up. So what if we saw the market go like this, dump back down, do that, come back, break this, break that, rally up? What would you do there? You'd be most likely looking towards the short on the small nimble time frame, because what would this be? Could be what we call a UTAT, a false break to the upside. So you're just always thinking chess moves on your consistent kind of, structural base. I say this to people all the time: patience, react, don't predict. Something like that is what you want to be doing. Patience, react, don't predict. We want to react to the structural formation of the market as a whole, what it's telling us. All right, let's go back over to some others. Let's have a look at the Dow here. Let's look at what the Dow is telling us. Is the Dow showing us anything differently? I would argue pretty much no. Dow is currently holding up. Defended zone sitting right here. If you want to know where the Dow gets destroyed, around 32,520. Break below that would be very big. By the way, does everyone like this background music? Yes, no, let me know. Do you prefer it sitting here? Is the volume okay? Oh, no worries. No worries, Paul. Kevin Paul says, Tom, what do you think of Boeing at the moment? We'll have a look at that soon, Kevin. I'll check that out for you. Jay Nibble doesn't like it. A few people like it. Sheldon says, I want to kick its ass. Okay, well, it seems like maybe we'll have to do a poll on it. Here we go. They let the people. There we go. I put that there so you guys can vote. I'll just go with whatever the general people want to do. There we go. All right. So US 30, I think Dow's fully agreeing with this today. Nasdaq, let's have a look at the Nasdaq. Nasdaq, similar story. You've got the defended zone. I think anyone could pretty much come in here and know this is a super important zone for the Nas. Currently holding body closures underneath here, or wicks underneath here would be very negative. At this stage, we're in a bit of a holding pattern, made a new peak. Currently, it's risk on in these markets. So that means the Nas should outperform the SPY. As we've been saying now for 2 weeks, especially the last week, we've talked a lot of smack about this. We've said, yes, we believe that risk is on in comparison to risk is being off. And we're using XLY, XLP, which I told you is one of my leads to figuring this out, to do it. Consumer discretionary versus staples. Defensive is staples, risky is XLY, consumer discretionary. When consumer discretionary is going down against XLP, it's all defensive. The market flow is defensive. Remember, the market flow started becoming defensive November into December of last year. So it was already defensive ahead of the crash. That's because these sneaky, evil, composite man devils, because they are devils, they decide they've already been transacting. And just remember, they were transacting defense through a lot of 21 anyway, and especially transacting defense through the back end of 19 into the crash of 2020. And this is why I always say, no matter what anyone tries to convince me of, we were year 10 in a bull cycle. The market was going defensive. Whether it was COVID or something else, 2020 was going to be a year of a crash, at least in my belief. Markets don't tend to run over 10 years very easily. And when they go defensive like they did here, in terms of sector rotation, it's usually a sign you're at the end of that cycle. Thanks very much, Prime Profits. I appreciate that very much. Very cool. Prime Profits got the Bitcoin. We'll have to do that. So we've got a question about Boeing. We'll do that one very soon. Let's go through some other leads. Copper. What's Dr. Copper telling us about this market? Is it sick or is it okay? Still holding. I give it a little tick. neutral, up, not bad. Not necessarily bad, so that's good. Let's go over here, the VIX. VIX still above 25, but starting to break underneath here a little bit. Could be good for bulls. Back to 20, question mark. Certainly possible. I think that 20 seems fairly likely at this point on the VIX. New high on the SPY should force a 20 on the VIX. Nice little rally, 61.8, be all very cool. As would make sense in many, many things. Got to also remember for all of those kind of Elliott wave specialist people out there as well, this needs to be, you know, they're going to struggle to kind of figure out what exactly is going on here. But a lot of people in higher time frames might say, well, maybe this is our standard formation up into there. This was for a lot of people the kind of ABC last time. Is this same A, B, kind of, will we see the C? I don't know. I prefer just to look at the price at the moment and the flow, but yeah, look, those types of things do occur, and all signs currently point towards this. Let's now move over to a few other leads. What else have we got? We've got oil kind of coming down here a little bit. Remember, for the stock market to really rally, oil needs to really get caned. Ideally, it would come down because it's not good. It's hurting our inflation story. And I told you last week, I don't unfortunately have the symbol that's telling me, or the signal that's telling me the US 10 years dropping anymore. So over here, we made the decision that, of course, TLT, bonds, those types of things were doing the transaction. That is, that they were going to go down and we might have seen peak inflation. Unfortunately, it all comes back to China. If they don't abandon COVID zero policy and don't believe yet just opening up Shanghai is not enough, they need to abandon COVID zero policy or get everyone vaccinated. And if they don't do that, what's going to happen? It's going to outbreak again. They're going to shut down again, and we're going to be even more supply issues. It's bad, yeah? And that's bad for the 10-year. And I think that's what's happening at the moment. How about the DXY? Of course, we need to look at the DXY, another one of our leads. DXY, let's break this down really, really tight here. And then we'll go into some of these stocks as well. Just a little over 36 minutes at this stage until these markets open, okay? So we're not too far away. Thank you very much for being here. If you can smash that like button, we really appreciate it. Dollar index is tough because it could be in distribution. It could be in, like, it's obviously boxing. So we would draw the box. We would say, okay, it's kind of stuck. Let's read the price. We breached this, which would have held orders theoretically. So this would be similar to the euro US dollar. That then has pulled back, which should trigger buying. So for us to be bearish on the DXY, needs to get underneath this zone. Right there. We clear that. I don't care about this area. I want to clear this down. Okay. So if you're feeling bearish on the DXY at the moment, short term, I'd feel bullish on the DXY. Not that I personally would trade it, but yes, that's what you would feel. Michael H, $4.99. Thank you very much. Tech breaking through monthly resistance. Please look at IBB2. Sure, we'll check it out in a sec. Mark says, do you day trade or do you also have long-term positions? You always have long-term positions, Mark. Always. You'll find even as a trader, you only trade with a portion of your portfolio, and most of it you will have actually in long-term positions, which you put on the crypto. That's like the kryptonite of traders is having all of their position trading because that's not really the way it's done. You want to have long-term as well. Of course, you'd be stupid not to. I love all asset classes. So we end up getting a 57% vote for yes on the music, by the way. So I guess we'll leave it for now. Now, what do long terms have to look like? Well, they can be a mixture of property, stocks, sectors, indices. All is good, all is cool, even bonds. So yeah, DXY at this stage, I want it to breach underneath here for me to be bearish again on it. And at the moment, I'd just say it's in it looks more bullish than bearish from the current little miniature price action that I can see. But I'm not interested in either direction. So sometimes you're going to be neutralized on something and you're going to say, well, I'm neutralized until certain things happen. That's my opinion on the DXY. Let's now look at tech, TECK, tech resources. Then we'll have a look at crypto and Boeing. We've got Boeing coming up. A few people want Apple, so we'll check that out as well. Let's now go down here. Lawrence Pong, $4.48. Thank you very much. Singapore dollars as well. Love Singapore. Great place. Definitely worthwhile checking out. They've got the ship on top of the casino building thing, the Marina Bay. They've got a cool zoo. Great food. Bit hot. A bit sticky, but yeah, great place. I do like it. Got a few friends from there. So tech here. Our question is it breaking out? Let's have a look. So what is this? Coal company. Why do they call themselves tech resources? It's like a dodgy in some ways, the way they name themselves. Look, you've got a long leg doji on the weekly close. That usually shows a bit of equilibrium or, of course, indecision at these points. It does mean that it's getting ready to make that next decision. I would say you're at resistance. You did make a high, so you've clearly broken the resistance off here. But in general, I would just go with this is fairly. It's a bit early for me to say that's broken out. I'd prefer the pullback action or the breach into pullback, pick it in 40 and then spring off, that kind of thing. I couldn't make a decision here, unfortunately, on tech. The other question was IBB, I believe, which is biotechnology. Biotechnology is improving. Big issue here, 122 for the IBB. I've checked this out a few times. You've also then got this downward trend, I believe, that goes for quite a while. So see that downward trend here? Unfortunately for IBB, your biggest nemesis is the US 10-year at the moment. Funding is getting harder out there, and none of these companies make any money. The idea of a biotech company, come up with a great concept, burn cash until you can prove it, then sell it to somebody. But you got to burn the cash a lot. Currently consolidating, probably a bit of a defended zone. So I would say that at this stage, looks bullish, 113 being the critical area. And of course, if it does start breaking out, you've got pretty good targets in 136. This is going to be an issue because you can see that downward trend. At this stage, if the market breaks out above, that would be the target. Good luck. IBB has the tweezers, weekly tweezers. Let's have a look at the weekly tweezers. Yep. Okay. Fair enough. It's the weekly tweezers. Look, it's looking better. We've got defended zone. You've got your tweezers. You've got your downward trend. If the market goes bullish, IBB's very oversold. And for a lot of people, they won't know how oversold it is. It's back to 2017 prices. And it went down to 2000. I mean, it went all the way back to 2015. So yeah, not the best sector to be in at the wrong time. Ranger A hates the music. You don't do live YouTube sessions anymore? I do them every Monday. All right, we'll kill the music for now because enough of you were unhappy about it. And I think people won't be. I don't mind it, but anyway. Doesn't matter. Can we look at Tesla? We'll do that soon. Voice of Reasoning, $5 for your service. Thank you very much, Voice of Reasoning. Appreciate your support. Jimsy says, Tom, can you discuss the SPX levels again? Yeah, we'll check it out soon. Don't worry. Have a look at Boeing. Ooh, horror show. Oh, man, Boeing is low. Didn't even realize how low it was. Back to May of 2020. Boeing's had so many breakouts and then so many failures. I still remember the one over here where we're looking for it to go bust there to this point. All right, let's have a look at it on the daily. Technically, yes, it's done the first step of change of trend, and technically it should be going towards 157. New trough, breached the trough, breached the peak here. Had a very strong close on the last day to get rid of that. You would be targeting at this stage. Boeing looks bullish at this stage to 157. Volume not really up on it though. Thanks, Ranger. Yeah, so I think this is not really a huge amount of extra volume. It's not like the composite man or anything like that. The general idea of the market is not really strengthening. Yeah, it just does look bullish. That I'd be having a big problem with 157. Paul says, I think Musk manipulated the stock on Friday when he said 10% of the workforce cut. Then over the weekend, he walked those comments back. Yes. Music was better. Yeah, well, 57-40. If you guys had voted 70-30, I tell you what, I would have left it there. We'll see. We'll probably bring it back in the future. Either way, I kind of prefer the music. It's more chill for me at these times. It's 11 o'clock at night. Come on. These are the things I do for the American market because I love the American market so much. Let's scroll through some other stocks. We'll do Apple here. Apple filled the gap Friday. I'm just pretty happy with that. I said that in the private streams. We do private streams, by the way. I still stream every day of the week, but due to the YouTube algorithm and a bunch of other things, if you're interested in getting that, links in the description down below. Obviously, try the free day 7 trial or become a day trader member. Link it with Discord. We do Tuesday, Wednesday, Thursday, and I've been doing a few Fridays as well. So if you want this stuff, even bigger detail, short and sharp, definitely suggest it. Otherwise, this is pretty good here. Apple filling the gap. Very nice. This is good. This is what you want to see as an Apple fan because it's filled it. Now we're going into a news hype day. I don't know whether that's going to affect Apple that much. It used to have a statistical. I used to buy the rumor because I knew I used to work many moons ago. I worked in that industry. So I would actually, this is back in like 2008, 9, 10, that kind of area. When I was first getting into trading so hard, I was very into trading Apple around this idea. So I started, in Apple and tech 2005, 6, if I remember rightly. And you used to be able to buy the rumor, sell the fact on all of those earnings, new announcements. So they'd announce iPad 1 or they'd announce iPhone or something, and the market would in general go up into the announcement and then sell the fact. I don't know if that happens anymore. I haven't really trialed it in a long time. I got disinterested when they didn't actually announce any new technology. They just made it boring. But yeah, I would go with here is a good gap fill. And at this stage, I'm bullish on the Apple along with the market. Apple 15-minute doesn't show gap fill. Okay. I don't know. Seems pretty damn close to me. Maybe not full gap fill. It's like a little 20 cents or 10 cents or something. Hot or fast says Amazon 20-1, current price 125. Yeah. MR3 says, hey, Tom, we haven't caught your live show in a while. You see deflationary bust coming in the next 2 years after a nice melt up after this dip, yeah, I'd be very scared. If we get a proper melt up, let's say we get a melt up that then I'll just talk long. Okay, I'm just going to talk long term here. My personal opinion, not to be taken or construed as any kind of concept that you should use. Okay, I'm going to draw a black screen now. Okay, I'm going to give you my personal opinion. Here we go, guys. Here is the market right now. All right, we're here. My personal opinion is we rally a bit. We drop again, possibly a new low. Most of the bond traders I know tell me that it's going to go to a new low. I don't know that. We'll see. We'll trade. I look at I react to what's going on, so we'll find out. But my guess is that the market will actually make it an all-time high in the second quarter of next year, maybe even earlier. And that then you'll see 50% of all bonds invert at some time in the future. If that happens, yeah, I will believe that we're going into a very bad crash. Do remember one thing. When the Fed printed, they can't stop. Ever. No, Ray Dalio's right on that. They can never stop. They will only double down and quad down and keep going. And I believe the Fed can take it really far. Look at Japan if you don't believe me. Japan is insane. They own like 65% of their bond market or more. Someone might have the stat. It's crazy how much they own. Very large amounts. So America can own a lot. The thing you'll be really worried about in America is the amount of transactions over the next couple of years. What I'm looking at is this: US dollar transactions converted. At the moment, it's like 80% of all worldwide trade is done in US dollars. That's the way they settle. Once that drops under 60, 55, get worried. Okay? If that may happen. That's a long-term approach, but that is scary. If the USD becomes less. This is long-term. I'm not talking about tomorrow or anything like that. But my idea is a new all-time high followed by a 50% inversion. And I'll explain to you why. Let me load this market up. Let's load up a US 10. We'll go US 02Y versus US 10Y. You guys want me to do this or not really? Let me know in the chat. Let me know. Japan is a horror show. Okay. So, did I do this one correct? Let me just have a look here. Get rid of this for a second. Basically, what you want to be doing is going back over to inversions, okay, back in the past. So if you put SP 500 on, well, firstly, don't use the damn. That's why, because I'm using a stupid 15-minute. All right, there we go. So once the US 2-year versus 10-year or the bonds invert, generally what happens is a few things. The markets will invert, and then you'll generally see a decline in the market. So if you think about over here, the market inverted and it went down a little bit. It's inverted recently and we're going down. More than a little bit, but we went down. If you look at all other inversions throughout time, in general, we invert, the market declines, then rallies to an all-time high. I haven't seen that break off the first inversion for a very long time, if you go back through history. But when 50% of the bonds invert, I put this on the channel before, public in many times, I'm worried. Okay. At that point, hey, I'm going to plan for the apocalypse. All right. At that point, I'm planning for the apocalypse. But until that point, you can't convince me that the market's going to burn all the way down to nothingness. But when 50% of the bond market inverts, that is the 2-year, 5-year, 10-year, 10-year, 5-year, 20-year, 30-year, all of those invert to get, like, when it all happens, whoa. No. I'm not bullish at that point. Don't get me wrong. I'm going to be running for the hills because unfortunately the next crash, even though the US will print out of it or try to, it could be like some kind of horror thing coming. And it will all happen in property. You watch. It'll probably come out of China too. They'll hold it for as long as they can. But mark my words, it's like the 90s in Japan. Jeremy Graham is not wrong there. The 90, there's some crazy property prices over there. If we got anyone that understands property prices in Shanghai and Beijing, it's crazy, guys. Margin says, don't do it, please. This now will depress me for the rest of the day. Please let us know the day you get out. The day I'm going to be terrified, or at least start planning around it, is effectively when you see 50% of all yield inversions happen. Because once they all do that, no more than 12 to 18 months later, you usually see it go. That would terrify me. Truly, truly terrified at that point. At this point, I have to just go with the stats. And that says, at this point, kind of that could be very possible, or even, this right now going, either or. But to think that this is going down to the recession, I've never seen a recession happen when everyone's like recession. Like, as in, like, it might even go technical 2 quarters and actually become a recession that is short-lived. But it all comes back to, at the moment, supply demand, and it can be fixed like this. We can fix it, guys, but we need China to open up. That's what we need. We need it now. Andy A, 15. Thanks for all the info and effort, Tom. What do you think the longer term perspective after a crash should it occur? Oh, okay. Well, if you see a proper crash, longer term perspective would be Fed prints tons of money. Fed basically destroys the complete and utter US dollar, but it won't be destroyed yet. Technology will do incredibly well, as will consumer discretionary out of that kind of thing. And then you'll see the other ones, move through after that point, which I talk about in my mentoring. And then you'll see probably a potential breaking of the current leads, like the US 10-year lead, the bonds in the US, and you'll see a complete and utter collapse of US dollar being the major. And that look, that's Ray Dalio's concept, not mine, but I don't disagree with him. We're probably around 75% of the way through. Could it be 15 years? Could it be 20 years? Could it be 25 years? All are very possible. But look, some of you will completely disagree with me here. And I don't blame you. We've got about 16 minutes till the market opens, by the way. But my opinion is basically that it's all about the USD, guys. Like, if you have the major, which the US dollar is, and you have innovation, I cannot bet against America. And that's why Buffett for a long time was like, never bet against America, guys. He already knew that. He's like, ha ha ha, look at me, my little, Ray Dalio club and all of these other people. They already knew this for 50 years. That's why they've invested in America and made squadrillions of money, because they're really, really, really smart. Yeah, that's the sad part there, Chandan. This is correct. You make the right point here. Akash says here, US dollar, and anyone that thinks otherwise is wrong. You are correct. The US dollar cannot, I'm talking about US dollar failure. It will never fail before the euro, before the pound. They will get caned first. The euro would be the first one I'd look at. We're talking crazy far away. We're not talking next year or anything like that. These are just things that I worry about in the future. So I always do track transactions done in US dollars to see how many are settled, year to year. It's important to me because I lead it as a concept of how much I believe in America's strength. Lawrence Pong says, everything is pegged to the US dollar. The demand is always there. Correct. It will never crash. Well, history would say possible. Not for now, though. Long time. Depends what happens each time we crash. Each time we crash as an economy around the Western world, it weakens a little bit. So you've got to always ask that question. Just ask the question out of a crash. That's all you got to do. It's not going to happen like this. It's impossible. Everything with, hey, yeah, these are people that are smarter than me that come up with that concept, not me. Chess champions that I've spoken to come up with that concept. Roaring Sessions, how do you make tacos in prison? What the hell does that mean? That is 100% true. There's no way I'll be on YouTube anymore by the time that happens. Yeah, 15, 20 years. Come on now. We've all got a time horizon there, guys. Needs a few more crashes? Yeah, exactly. You asked me long-term theory, not like next year theory. My short-term theory would be 50% of yield, 50% of bond inversions. But that wouldn't mean failure of the US dollar. No way. But I do think about all these crazy things. I mean, unfortunately, it's what I think about. It's weird. Some people think about other things. I think about crazy 25-year-old, 25 in the future thought processes. All right, let's get back to the here and now. The market's going to open in 12 minutes, guys. Thank you very much to the 1,000 people joining us. We've got a big gap opening here on the S&P. We haven't checked out Tesla yet or a few other pretty interesting stocks. People want to know about Amazon. People want to know about Tesla. I understand. Let's get back into the daily here. A lot of opinions flowing through, and all of your opinions are absolutely legitimate. You obviously have come up with your ideas. I'm just giving you my concepts. You can disagree. It's all cool. I don't mind. It's open discussion. Yeah. Let's go over here to the 1 hour. So at the moment, we're opening up at 41.54. That basically puts us in the bottom of this candle here. You can see the gap. We're going to be opening a 41.08 to 41.54 gap now. So you'll want to box that up and understand that it might want to try filling at least a portion of that throughout the session. So I think what you're looking for today, in general, it looks bullish. Okay. In general, the trend is up. So we've already done that. Let's just quickly go back over it just for anyone that's joining us. Let's have a look here. Trough, peak, high trough, high peak, high trough, high peak, high trough, high peak. Currently bullish trend. You bust through here. Okay, cool. We can talk about being bearish then. Absolutely. And we start picking up and shorting and doing all that dance. Weekly, definitely down, no question. Daily converted to up when it broke through here. Current concept is to try to get it to 4,300, which is where I believe bears may come back in. That's at least our current concept. Obviously, you got to bring your own ideas in it. And now if we scroll down to the 15-minute, what do we kind of hope happens? Well, I kind of hope that the market technically runs down. I know you're going to say, well, Tom, how would you want that? Well, it'll just make more sense. But if it does run off and make a new peak, we've got to always have in the back of our mind that we could come and fill this before rallying to the 4,300. So that's why I want it to fill now. So the market for a day plan could come back down, try to fill in, and then you're looking for the change of direction, okay? The change of first direction, however you figure that out, whether that's a double bottom of some kind on your system, whether that's a RSI crossing a 20 MA, or I don't know what you guys use to get in. Could be VWAP, could be anything. I mean, obviously I like to use orders, supply, demand, support, resistance, and a whole bunch of structure questions. When I like to just use the kind of naked chart, but think about it more as orders, flow, all that type of stuff. But yes, this would be a very reasonable concept to say, okay, I'm looking for buys, but I want to see a market pullback first. Wouldn't blame you. If the market rallies past and closes here above this level, then we probably run a little bit more, maybe a 4,200 or something, then pull back a bit. And I still think if you're patient, you will get other orders in. You generally do. A cash chopper, $5.43. Tom is wise like Yoda. I am not wise. I just use other people, really smart people's concepts in terms of they've come up with a, let's say Druckenmiller, I think is the best trader of all time. Yes, trader, because he's done 30% and 80% profit or 70% profit in bear markets. I mean, he's a god in my opinion. He's done it with billions, tens of billions. That's crazy. But I've read his stuff. I've listened to his stuff. I pay attention. I learn. I absorb his stuff. Like you guys are here right now. You're stealing little bits of information from me. You're like, yes, give that information to me. Give it to me. And then you'll leave once you figure out you have enough and you've sucked all of my information. And you'll move on to the next one and get that. I mean, that's what we're all here for. Yeah, we're all just trying to get ahead. Fair enough. Thank you very much for the $5.43. Also got Muhammad Al-Masari saying, member for 14 months. By the way, thank you very much for the support there. Congrats on the 100K subs. We're not there yet, but that is a good reminder. 1,023, please sub, guys. We're getting close to 100K, which was honestly it's amazing. Life dream for, I'm sure, many out there. Absolutely amazing. Advance, you deserve it. Are you still not convinced by oil and natural gases breakouts? Not really. I mean, look, if I'm not convinced by something or I don't like it, I come from the mindset of abundance. So, like anything in life, if you have an abundance mindset, if I don't like something, do I have to trade it? Chat, do I have to trade it if I don't like it? No. Yeah. I can just go and I can focus on something else. I can go trade the SP500. I can go trade the NAS. I can go trade gold. Something I like, something I understand. If I'm confused or I don't like it, I'm not going to be confident in my position. And the problem with that, Mohammed, is I'm going to therefore get cold feet and jump out of the market and jump back in and jump out and make crazy mistakes and have a heart attack, and it'll be bad. So we don't want that. 7 minutes till open. So I'm still not convinced by oil, no. But I'm not really doing anything. I'm not shorting nor longing. I'll tell you if I change my opinion. But a few weeks ago, I would have said, yeah, probably going short. But unfortunately, my lead indicator stopped telling me that. So I have to pull the concept for now. A few people saying, no, you don't have to do that. Exactly. Andy A, 15. I don't know what that is, but thank you very much, Andy A. Your take on Q2 earnings across retail, tech, and buildings and its influence on the market? Probably pretty crappy, but I think the market has already priced part of the crappiness in. So my take on Q2 earnings would be, I believe most of the forward guidance has been lowered across the board. I haven't really looked. I've been so focused on SPY and gold and a few other little. I bring it in, but I focus hard on these things. So, yeah, I think that a lot of it's probably priced partially in, but I'll be just watching the SPY. I don't want to speculate on it. I don't know. That's the problem. How do I know what they packed into price? I wish I did, but we don't. We can only react and not predict those things. And is it worth my mindset? Can I be smart enough to figure that out? I mean, maybe someone else out there can. You can send me your research and tell me what you found. I'll share it with the community, or I won't. Just give it to me. That's okay. I'll keep it. But yeah, it's very difficult to say whether it's packed in or not, unfortunately. Certainly lowered. Expectations are lowered for second quarter by the street, for sure. Ooh, $19.99 super stick. I'll give you a little bit of clap. Thank you very much. Thank you very much, Batia. Appreciate that. Super sticker, $19.99. We give a few claps in the chat. Very appreciative of that one. Johnny S says, hi, Tom. Do we get access to your private live streams by being a YouTube member? If you're the day trader, yes. You just sync it up in Discord and it will automatically apply it. And then you can see the rooms. The stock trader thing's more of just a support to you, but I do appreciate it. But no, you don't for that one. So market here coming in. Let's have a look at Tesla. You guys wanted it. Let's have a look. So Tesla. Did it fill the gap? Yes, it did. Did it come down pretty hard? Yes, it did. Is it up in the pre-market? Absolutely. And the good news is here is it filled the gap. The other good news is, could we be setting up for an inverse head and shoulders, at least from a pattern perspective? Well, I certainly think that's possible because we've got here the left, we've got the head, we've got the right, we've got the neck. And just so happens that the neck would go into a monstrous supply over here. So that would mean some pretty significant gains here on the old Tesla. And you never bet against the Tesla in terms of making crazy moves because it loves doing that. 30% that would be. Woo! And that's from the price today. Damn. All right, let's now have a look at a 2-hour. So is it showing you that yet? Well, there's a gap to be filled. And right now it's only opening at 729. So technically the gap to be filled is up to 774. Now, gaps in stocks are not as solid as filling as a gap in the S&P 500 or something, because S&P 500 is smooth. This is not smooth. But you would think that it would try, day traders will try to have a go at this. Now, how many is it left on the way down? Let's just have a look here. That one filled, that one filled, that one filled. So in general, other than this little one here, which I found over here, it's been pretty good at filling most of these gaps. So you would probably say at this stage, if the market, especially if the market broke to a new high, Tesla might play catch up. What do you guys in the chat think? What do you think? Yep, we'll definitely check out Amazon very soon. Appreciate it, Hassan M. Thank you very much. Amazon might dump on split, possibly dump on split 10 cent, but generally will hold up stronger around this period. And a few people saying it's had momentum lately. Yeah, look, it's people buying into the hype of the split. It's getting close now. It is there. So, that's what they're doing. What do you guys think about this fill? Obviously, from the fill, if we breach this area up here, good times. You've got a pretty clear level of kind of heavy demands. We got bullish on Tesla after this breach happened. It's kind of come back to that price. I'm scared of Elon all the time. He's kind of terrifies me with his little tweets. He'll say anything. He'll say lots of stuff. It's not always good for you being a buyer. So yeah, I'm a bit terrified of that. But in general, I think it looks relatively strong. No, they do not always need to get filled. Just statistically, they get filled. I think it's like 70% or something on the SPY gets filled over the 30 days or something like that. Eric says it here. If Elon stops tweeting, we might be able to fill the gap. That's correct. Let's now go over to the market opening here. So we'll get that Bitcoin going as well a little bit later. Thank you very much for joining us for the session, guys. Smash that like, subscribe if you can. It's all very appreciative. So, yeah, this market opening up here at 41.50, basically creating a little bit of a gap. Now, we saw the gap. We'll use the real market to demonstrate that. But I just wanted to show you one of the theories we had at the start of today was that this was creating a box. And that box could have been its own little Wyckoff kind of concept. Basically, here we have the BC. Here we have a potential UTAD. And if we breach underneath here, possibility of movement back to fill that gap. So here's the market. It's opened up. We've gone bullish, obviously. If we breach the top and we keep going, we may leave the gap. You don't have to know it fills. It may not fill. But just remember, it kind of strengthens that case that as we run up through the 40, if we get to 4,300, it strengthens that case for it to come back down later on. So it is risk on at this stage. XLY, XLP showed us that. We looked at it before. That shows us consumer discretionary versus staples. That means that the NAS should theoretically at the moment outperform the SPY, theoretically. And we've said that for a few days now. Gap ups get filled, says 1329. Gaps down don't. Statistically, yes, more likely. But still, both have decently high stats with them. Amazon looks like it's 95% down. Don't worry, guys, it's not. The split obviously coming through. And we'll check that out in the chart. Let's have a look at it right now. Look, oh my goodness. It hasn't been hasn't been fixed, of course, on the charts yet. Let's check that out in the daily. So 125 for the split. There it is. This will all get updated and look more beautiful soon, probably on the next session. Now, how does these types of stocks, you can't really tell what it's doing today anyway, but how do these tend to react afterwards? Well, they tend to actually usually have stronger months afterwards. We've shown the split stats before. Amazon's still a great company, don't get me wrong. When risk is on, Amazon is consumer discretionary. It's a huge part of it. So, of course, that shows why it's going up. Google's another one that people are targeting at the moment for the same or similar idea. I totally don't blame them. It actually hit our massive demand zone a little while ago. And at the moment, it's playing fightsies with the supply over here, the resistance. So if you can breach through next stop 2460, I would think, on Google, and the split is not that far away. So it's at resistance at this stage for the day at the supply. A breach through next zone here, breach through that. Of course, maybe we go really far up. I'm not too sure about that one, though. I think that this would be equal, most likely, with like a 4,300 on the SPX or the SPY. And if we get the 4,300, that's where we think those bears might come back in. His name says, weird seeing Amazon on trading view after the split. Yeah, it'll fix itself, though. But the ding is in. All the hyper stocks, as you can see here, are really doing well for the session, all up 2-3%, generally risk on across the board. Bio doing quite well. Let's load up here. We'll go over to the sector. We'll go heat map. For anyone that didn't watch my video, click on the somewhere. I am doing a bit of a sponsorship with these guys at the moment. One of the reasons, if you're Australian, go over to the video I did today, and you might want to consider opening an account with them. It's a pretty good deal, guys. So you definitely want to check that out. But more on that in next week. We'll be doing it next week in the stream. So here's all of the sectors. Let's just quickly go here, top 50, and we'll do it by percentage change 5-day. You'll notice obviously which ones the money's been in currently, and then we'll do percentage change in general. So this is just showing you that almost every sector's pretty hot right now. Now, which sectors are doing really well? Well, funnily enough, it's one of the ones that's done very well recently, which has been interactive media. Semiconductors also showing strong sector rotation. Automobile manufacturers coming up 2.89. So that's where the money's been. And at this stage, that seems to be the ones that are kind of coming through with the goods. There's so many sectors out there and so many ideas. So, of course, that's fairly strong. Of the popular stocks, let's have a look at the percentage change. So we've got Twitter down at the bottom, 37.98, I believe. A few reds, not many. Up the top, big percentages here. We've got SE, which is, of course, a fairly large hyper stock. Bunch of semiconductors, Google, NVIDIA, more semiconductors. It's a semiconductor kind of day in terms of raw percentages, doing quite well there. Hypers, all the stocks you guys love, doing okay in the morning. Do be warned of the fade, obviously, into the gap. All these stocks will be gap opening. SP 500, let's just look at the 15-minute chart so you guys can see it. There's our gap. Gap. So fade is semi-likely. Why is the VIX holding up? VIX can hold up due to volatility. People say it always is the fear gauge, which I call it as well. But funnily enough, the VIX can actually go up on bullish days because it's more based on volatility. And when you open up 1% bullish, it's still technically creating volatility, yeah? How do you access the program? Well, you'd have to, it's just a broker, so you'd have to sign up with them. But look, I'll pop the links are in that other video. I wonder if that noise is coming through. I hate that noise. Let me close that. There we go. Thank God. No, that's not the one. There we go. Fantastic. Thank you very much to 957 people joining us. Appreciate it. Got to be a bit wary about the fade here. It's the retail hour of power. Let's have a look at the US 500 movement now. Let's check out our little box zone. So obviously we have that concept that this could be all at the moment looking towards the negative, at least initially. New low just formed then. There we go. New low. So don't be surprised with the fade. Market likes to come back, scare the retail. It's also a pretty decent little box. Where could it come back to? Here or in here? We don't know yet. All of this becomes something that you can feasibly react off. Let's say we go negative and then we go bullish and break through. Very strong. Very strong. Very bullish at that point. So once you get through there again, you suddenly become incredibly bullish. Thoughts on using weekly RSI bottoms to end and tops to exit as long-term strategy? Ooh. Look, RSI is always going to do something very similar. So the RSI is always going to show you something very similar when you're looking at it on the charts. And that's why I don't really bother using it, but it's a good indicator. I mean, it's in my course. We talk about RSI. So we do like that as an indicator. It's one of the main ones. MACD, RSI, and Bollinger are all pretty okay. So you can use it, but it's more like if you know what price is doing and you understand where the RSI is going to be, you can always tell where the RSI is based on price. Justin Van Duser says the market doesn't care about Apple have video game headsets. Yeah. Yep. So SPX is sliding here a little bit. This is one of the most important markets, obviously, to be watching. Still, the outperformance of the NAS is pretty strong. So what you're looking for today is really just a possible pullback to fill in some of the gap or fill the gap itself. Then you're looking for hopefully a reversal. If you can see the reversal and you know how to spot it, of course, that would be fantastic because that would be quite a strong move. Be patient, react, don't predict, yeah. Nothing wrong. Like most retail traders lose because they go crazy in the first open. And they go, I've got to place an order. I've got to do it. How many of you have the itchy fingers? I've got to do it. I've got to do it. I've got to do it. And you get in straight away and you're like, yeah, I'm in. And 5 minutes has passed and you're already in the markets. If you're someone like that, why not consider scaling? Why not consider putting a third of your order in with the itchy fingers, then 2/3 after? Probably you lose a lot. So your third in, once it's confirming and you see the right things and you see the reaction later, you'll be like, oh, much less stress. Yeah. Scaling is key to those kind of people. Terry M says, I've got these itchy fingers. And Sunil says, dump it. All right, let's have a quick look at the old crypto market. So remember, if we end up getting a reversal here and breach a new high, that could be quite bullish. I like to just chill and just wait. Just chill. Just chill. No reason that even though we've got a box and we're kind of seeing it move in and out, it's not really about this box that I'm interested in. If this box breaches and then it comes back down and then it does the right thing and I like my entry, then I'll take it. If it comes back down a little bit, then breaches through, then I'll consider it. These are things that these two things I want to happen. I'm just watching the price around here. Eric says you selling options. Yeah, selling options is good, actually. Most people, look, selling options is always touted as super risky, but it's actually a big player's game. It's like selling insurance, except you need to know what the hell you're doing. You can't just start an insurance company and it's like having an insurance company and not predicting there could be a flood in the country, in the housing area that you've been insuring the houses. That could end you, yeah? So you got to be very careful with selling options. Itchy finger quote. All right, so market currently rejecting this area. See how it ends up. Let's now move over just quickly here to Bitcoin because I want to talk about Bitcoin's return today. Quite a nice little pickup in Bitcoin. It's come back to its volume profile average, which is about 29.5. So it's hit the 29.5. It's bounced off this zone, which has become defended, which is pretty good because, I mean, it was already a volume profile sitting here. And we know that there's supply. There's all these orders sitting around this 32. So if you're feeling bullish about Bitcoin, think about the cool story it's telling you. Multiple maximum pain, defended zone, more maximum pain, new kind of defended zone, spring, question mark. Do we now have a nice enough base? Breach. Don't bet that it won't come back though. Get one more in and then go. And you can kind of see that Bitcoin loves doing this because if you scroll through history and you think about other times, it loves coming back for a bit of the dirty second hit on people. Here's a nice little area. Obviously, the orders are sitting in here. It comes back a few times, ends up in this case making a new low, and then it comes back again, hits it, and then after that, that's the rally. That's where you get that big rally coming in. Over here, very similar. So Bitcoin does like doing this. This one was a little sneaky, but the reason why is because if you need to understand that little bit there. Bitcoin is tough to read sometimes. The crypto market is a bit sneaky, but this is looking more promising. I'm still watching this area very, very closely. And of course, if you're somebody that likes to do your little averages and stuff, I can see why you might have liked that zone on the weekend. Market's now 1.07. So still early days here in the session. 15-minute. Still stuck. Denial phase Bitcoin says no FOMO sell. No volume, sell the bear rip. What volume? Are you talking about Bitcoins or are you talking about markets? Is GDX a good ETF for gold? Just have a look. Search GDX, search top 10 holdings. I mean, yeah, GDX is just holds a whole bunch of big gold stocks. Until where are you bullish for the NAS, says Hassan? At this stage, still bullish on the NAS, yeah. No real reason to be so bullish at this point. It's the same level. Like it's very similar to, it's all is the same. It's the same as S&P 500, really. If 4,300 is achieved by S&P 500, then Nasdaq should achieve this. And Nasdaq's been playing catch up. You'll notice recently it's really played a bit of catch up, especially through this point. Like Nasdaq from bottom to top is currently sitting at peak 12.65. And if we take SPY, let's have a look at SPY's gain. SPY's gain's 2% behind, which is consistent. It should be. So Nasdaq risk on technically has more capability. Let's have a look at the percentage from here. If we got up to this level, 6.51. Let's have a look at the S&P from current price to there, 3.62. So you'd expect basically Nasdaq to 1.75 beat per percentage point. So basically always be in front by at least this 0.4 that it is today. What do you think about jets and travel? So I've spoken about this at the start of the year. And I spoke about the sector here quite a lot, and I obviously talked about it here. Unfortunately, it didn't really create what I hoped, which was a bullish day through here. That's actually saved me because I was scaled into this by a third. I didn't get too much itchy fingers. Downward trend still intact, unfortunately. Look, do I like the travel trade? I theoretically do, yes. But there's a few things going against it. Expensive fuel is not really ideal for the travel trade. And that's what's really still holding up. Until I see fuel showing the signs of going down properly and actually me getting a lead that'll tell me that that's happening. I find it hard to go the travel trade and yet. Another one you can do is you can go Jets versus VT. So if you do this, you're putting it against the old Jets, right, guys? So Jets versus VT, and that's Jets versus the Vanguard total world index. And basically what this does is it kind of shows you whether Jets is outperforming the world and maybe the travel stocks on. So at this stage, not quite yet. But I've been watching this for a while. Rich Buddy says there's a new Bitcoin ETF called Bito. Okay. I thought there's like 1 billion Bitcoin ETFs. They're everywhere. Bad sign so far is that the IWM is unable to hold green, pushing some of these hypers down, except for the tech ones. See the switch here? Not ideal that it's going short. So at this point, the 2000, that is the Russell, is leading down. Don't really like that. All of these ones now starting to turn. So I can't say it's surprising that we're turning back because, of course, we expect to try to fill this bit of a chasm. But that seems to be taking a bit of a toll there on those IWM stocks. You'd like to see IWM hold up well. So again, more of a, looking at it, focusing on the fact that this is the first little bit. That's a pretty bad candle, by the way. That kind of shows that the market came up, took supply, and now it's working its way down. Pretty negative, actually. That's a fairly sneaky negative looking candle. Sunil says, what the hell is happening? Well, it's what you should expect, really. The market has to come back to get its efficiency in. Brian says, Tom, what do you think about the Fed's trial balloon on pausing rate hikes in September? Seems like they are walking back on it now. But if inflation truly has peaked, then it would be very bullish. Yeah, look, I think that if inflation has peaked, you'll see. Look, I don't believe the Fed's ever going to get to any of these 2-year rates, frankly. 2.7%, I just don't believe it. The reason I don't is, but it doesn't, it's not really what I believe. The reality to me is it's all just this. We've got supply and we've got demand, okay? Demand, in my opinion, has been dealt with. People feel less rich, okay? Less rich, technically good, but you don't want that to be there for too long. It's just sitting lower to help the supply. But here's the problem. The COVID policy in China, it's so bad. Like, we need it to go away. That's the most bullish thing, bar none, and allows the Fed to do what they're doing right now. Believe me, the Fed are behind closed doors saying, yes, we're so happy the market came down. It's their perfect scenario. They're like, thank God, we did such a bad job. Praise that this is happening because it's so lucky for us. It's like perfect for them. However, at the same time, they need the supply to actually open up. And it's not really doing that. And this is my biggest problem. I mean, you might totally disagree with me, but I just think of it as this. Cut the crap. That's the problem. We need a solution. They don't seem to want to make a solution. There is no solution at this stage. And that's the problem. I find that annoying. And if that fixes, hey, we probably just saw peak inflation. It's going to be there for a while, but it will slow. The Fed can get to maybe 1.82, but they're not 2.7. Come on now. That'd be very bad. Fed has no control. Fed has absolutely no control. They're just so happy with themselves about the market being down. Do you think the Fed taper is fully priced in yet? Don't know. Anyone that tells you they know, well, they've got some cool fandangling machines. Not easy to do that. A few people saying, yeah, I don't think that'll happen just yet. The market will do what it wants, pretty much. But to allow a nice, market turnaround, you've got, if you fix your supply, you will really get, without Fed coming in and printing more cash and doing all their little, support of the market. So fixing supply would be very cool right now. Very cool. That's correct. Realistically, if the Fed wanted to do a proper job rather than being stupid and annoying, they wouldn't tell you what they're going to do. I mean, how dumb is that? Why would they ever say? They're so stupid. Like, Druckenmiller's not wrong on this. They all the top traders and investors in the world, they all say the same thing. The Fed shouldn't tell you what they're going to do and flag it in front. That's just dumb. You should allow the market to see the uncertainty and therefore fluctuate the way it's going to. But the way that they do it, they allow bubbles to happen and all sorts of things. Oh, we're going to support it. Oh, we're going to print for this much longer. Like, we're going to do this. It's so ridiculous. Like, they're ridiculous. They shouldn't flag every single move they're making. It's ridiculous. And I think most people would agree. I mean, what do you guys think? Let's poll the chat. Chat, what do you think? Do you think the Fed should tell everybody in the market, hey, we're going to do this for the next 12 months and then do it? It doesn't seem like it. It seems pretty dumbass to me. Maybe they should. Michael says free market economy, so there should be no Fed. Well, yeah, you probably bring up a good point. What about that World Central Bank? Wait, I shouldn't even say that. No. Well, we didn't say anything, okay? This isn't a public chat. Yep. Seem like the Fed lies a lot. Well, seems like the Fed doesn't really. They probably lie a bit. They should just come out. Today, we had a discussion. We're cutting the rates, or we're raising the rates. See ya. Don't tell them anything. Yes, that'd be cool. What's my view on XLE? Seems like everyone's getting pretty excited about the old XLE again. I want to ask. I'm going to do this chat one. We're going to do a poll. Okay, here we go. Oh, here we go. This is important research data. Here we go. All right, give me your true feelings. We got 961. So we've got a data poll. If everyone voted here, that's like one of those Roy Morgan houses spending like $10,000 to do a survey of 50 people. So let's get our free survey here of the general gist between bullish and bearishness of oil. Let's see what you guys think. Have I checked gold? Not going through gold today, but I haven't checked it. We'll do XL in a second. A gold just currently. Let's have a look here. I'll show you. So gold made a new peak, but barely did, and it's conflicted. It's effectively in a little bit of a holding pattern for me. So the way I see gold is similar to the DXY, which we looked at before. I like the breach, but we've also got a breach down. So here we broke through and we kind of changed trend to the downside. We rallied and then we may have max pained up here. Okay. So I'm a bit skeptical on both trade towards gold. I'd like to see clean, then I'll pick and I'll take long. Or if we go down, then I'm looking forwards long still, but I'm probably focusing 1830 and 1810, just above 1810. So both of these zones I'm looking towards bullish side, and mostly I'm bullish. I'm not trying to short the golds here. I'm looking towards bullish switches, but I'm just watching the lows, and I would like it to go like this and then pick that and then grab that kind of thing long at this stage. But I can see why why gold's going down. This US 10-year is not healthy for gold. US 10-year is sitting at 2.988, not good for gold. Where do I think the end of this week will be on S&P? If I was guessing at this stage, I would say bullish because the bullishness is still intact. But, I've been bullish since really here and super bullish since here. And that doesn't mean, just because I say bullish or super bullish, doesn't mean that I'm going, oh, I'm bullish for 6 months, guys. I don't know that. I just theorize that at these points, the likelihood of here and here become incredibly more likely than the bearish side at this point because of the extension, the overextension. A good way, if you want to ever look at overextension, if you go to a daily and you have absolutely no idea what you're doing, and you're like, well, I don't really know what I'm doing, but I'm just gonna, I want to be a trader, guys. Okay, I want to be a trader. Well, you can just load a Bollinger. You come in here and you have a little look around. You're like, whoa, what's this? What's going on here? Maybe I want to trade, add a second Bollinger on or something. Some people do this, and you might say, well, I want to make it 2 and a bit standard deviations. Well, that's fair. So if the market goes outside and it creates little wicks outside of your little Bollinger, little wicks, and maybe you can be like, I think it's bottom, guys. I'm going to buy. I mean, it's kind of simple, but theoretically, yes, you could technically do that. You could say, I'm going to focus on the Bollinger coming out. I'm going to look for little wicks showing that I've got a little bit of demand, and then I'm going to feel a little bit bullish about the next day or whatever. Then I'm going to play it from there. But these are the kind of things that people do. They look for those things. Now, would you have been wrong here? Yeah, you probably would have. But if you think about it, how many of these little outside Bollinger wicks were correct? I'll try it. No, you come up with your own ideas. This is just, I'm just saying that I know people that this is the concept that they like teaching other people. And I'm not saying it's very complex or very good, but it's certainly, Bollinger is not, standard deviations, isn't it, from the 20? It's probably, it makes sense. Bollinger is not a stupid indicator. Would I use it on the SPX? Yeah, more so than the US 500. Do you look at the COT reports? I do. COT reports are generally obviously given out after the fact, but you get them and you can use those to get a bit of an idea on generalized changes in the markets. Something I do want to probably bring into the daily show. We'll do some COT report action. Brian says, Tom, what do you think about REITs? I'm a sucker for the high divs. Oh, yeah. Come to Australia. That's where we have high divs. But I'm wondering, what is the correlation between the housing market, overall market, and the S&P of REITs? REITs are super dangerous if you get them at the wrong times. And usually if a crash, like a proper crash, we're talking like GFC or any real big crash, it generally happens in property. So you got to be very, very careful in new high, by the way, in terms of the market just about to. So that's a good little ramp there. So that's usually a pretty big thing. Look, I'm not a huge fan of REITs. The idea of property is always that, and I love property so much. Yeah, I really do. In Australia, it's like a religion. That's true. Anyone from Australia, they would know. However, I will say this: property is based on two concepts: no more land, and then it's also based on population growth. That's the general concept of, general people at a barbecue or something that talk about property. Well, no more land. Well, yeah, I agree with that. That's probably a big tick. Population growth. Yeah, well, question mark on that one, guys. Not really. Some states, maybe, some areas, possibly, but in general, Western world, no. So it's going to be a tough 30 years here for property. Will it follow the trends of the past? I don't know about that one. But of course, high-end areas certainly will. High-end, desirable, but the idea of population growth never ending, well, we haven't actually seen that for a while. It's been population decline. So it relies on, of course, a lot of immigration, those types of things. Here in Australia, I think it's safe. But it depends where you are, what's happening. So, yeah. Look, property usually begins and ends all horror recessions. Rich Buddy says a recession will kill your REITs. Yep, that's what happened in the GFC. They got messed up. And I saw people in REITs in Europe, let's just say this, gone. That's all I have to say. Very much gone. Completely gone they were. Just blown up, just backwards, then some. Horrible, horrible, horrible. Here we go. Dale says there's only one stock both Kathy Wood and Warren holds. Does anyone know which stock it is? Anyone? I don't know. I'm not going to say I know what it is. There's the question. Let's have a look at the actual full gap fill. Wait, she owns Apple? I didn't think she had Apple. People don't like Kathy Woods. Amateur, they say. Oh, look, yeah. I don't know. I don't, you know what I feel. I've said it for a long time. I thought the worst thing I ever saw from her was when they bought Coin. I lost all faith. That was really bad. It's really bad, guys. That was really bad. I actually don't know. Oh, here we go. STNE. All right, let's check it out. Sonico. I thought it might have been Snowflake, That would have been my answer. Snowflake. Look at it go. It's up today, guys. Oh, it's down so horrible. Oh, well, at least it's been on the market. Wait, really? Buffett bought this? One. Okay. Not his style. Must be one of his new minions. It's not old enough usually for him to get involved in these, but a few of those haven't been, like Snowflake, etc. Yeah, it looks pretty strong. Nice break here at 996. That's pretty good movement so far in terms of the rally. I would say that it's got a little bit of legs in it. Some issues around here, but in general, you could really see it back at 14. Could that be the bottom? Earnings is out. Seems to have liked it. Volume's been tight since then. Yep. I mean, not the thing I dabble in, but certainly maybe I'm just bringing it up. 50-50 on the oil poll, by the way. Thank you for voting as per usual. So we've found that the spread of the idea seems to be very neutralized. Market's up again. Let's have a look if IWM has managed to lead. It's gone back to 0.8%. Still a resistance sitting at 1907. Nasdaq really hitting it out of the park now, 2% up. Pretty decent switch. Just looking through those stocks. Yeah. I mean, it's good. Look, you know my opinion. I'm not going to change the idea of being in general bullish for now until the market tells me otherwise. Polls are very useful. Yeah, polls are good. And then we've got an awesome community here. You guys vote on the polls, like good 20% of you vote on the polls. It helps us get a bit of an idea of the general consensus out there. And sometimes we can come to ideas, which is good. Right now, it's a flip of the coin on the old oil. As it says, people who don't participate in polls should be penalized to pay $1. Hey, when I come over to America, which will be eventually, I'll make them buy me a cheeseburger. How much is a cheeseburger in America? I have a lot of cheeseburgers, it sounds like. Not that I want a cheeseburger. I just want one of those Chick-fil-A things. When I come to America, I'm going to eat Chick-fil-A day one. Chick-fil-A will be eaten, and then I don't know. There's too many random. I just want to eat the Chick-fil-A, and then I'm happy. $10 for a cheeseburger. Damn. Cuban sandwich, yes. Real rug DIY could be fat. Tom, I have a Chick-fil-A about a mile from my house. I don't know if walking a mile will get you skinny on that one. Do you want me to overnight express mail it to you? Is that actually possible? Is that creepy? Eating like a mailed overnight burger? That's probably possible, yeah. I've never even heard of anyone doing that. Probably one of those young YouTubers should do it. I mailed a burger around the world and ate it. Has someone done that? I'm sure someone's done that. That's awesome. I mailed a burger around the world and ate it. I'm sure, like, if PewDiePie or whatever that guy's name is, the Mr. Beast did it, you probably get like 50 million views. Oh, the shipping would definitely cost more than the burger. Shipping probably costs $100, $150, maybe more. Just buy. Well, actually, what you could do is just buy like a economy class ticket for it. Just fly the burger in the seat. Okay. I will debate this. Yeah, I'm looking forward to it. I do want to come over there. I'm just working out how much I can actually work on the fly. So I'm going to get a pretty beast laptop to see if I can get it done. Unfortunately, I need a lot of info to cut everything for you guys. So, and plus what I actually do during the day. So it's a bit tough here. Look, this market is still looking pretty good. I guess we'll probably cut it up here in terms of today's trade. The only reason I'm not too interested in the session open, it's not because it didn't move 0.5%. Hey, don't get me wrong. It's just that I do like what it did. I mean, obviously it came down, rallied, and, it's done a still dance. But when it comes to getting into positions, I mean, I really enjoy waiting for certain things to occur. So my style is actually more, I wait for that kind of thing. The structure in here I like a lot. that's really good structure, really great trades that I've positioned, that those types of ones I like. Even the Friday session, like, I saw this area here and I really liked it. And I super liked it this morning. I mean, this morning to me was a no-brainer as well because I'm still bullish at this stage. I don't have a reason to believe in these false fake rallies down until they bust that 4080 we talked about. We bust down here, it gets really close, then we're talking different. But at this point, I've got to be semi-bullish here. So these type of bases are what you're really looking for. All of this is semi-tough to get into, because if I do get into this, let's say I buy here, or I even bought somewhere in this area here, which you probably could have bought there. What do I do when it fills that full gap, when it comes up in here? Do I have to sell it? Do I get a high enough risk reward? Always ask yourself these questions. If you're already in it, then you're celebrating anyway. But you've got to expect, if you're already in it, that you had to expect that this could be possible. So you've got to plan around that. And if that did happen today, there could have been a great trade there. It still could be. BTC going to test 32K again? Yeah. 32K was that was a very, very good call by the community here. I like that one. I mean, yeah, I might have come up with it, but I'll give you all the credit, everybody. I'll give you all the credit. Look, 32K was a good one. Tesla for today. Yeah, I'm surprised Tesla's actually so weak. I would think it would be stronger. Excuse me there for the coughs. Yeah, this is filled already, actually, its gap, but it should, like, it's got a huge range here that it's not filling. It should already be firing hard if it's gonna, like, that's super annoying. Like, Tesla should be firing, you would think. Maybe it's playing catch up, I don't know. But if the market keeps going up, then you would think that's going to be a good area. IWM respecting the daily 20. Yeah, IWM is another one you want to watch break out. IWM seems to be leading a little bit here on the old markets at the moment. So if you check it out on the futures here, it's found resistance at 1906 a few times. Again, early on in the session, it's dropped. It's then recovered. And at this point, you're kind of looking for IWM to hold up. Could there be a little trend line around the back here? Maybe. Do you want that to be breached down? Not really. You want it to breach the 1908. That'll be a good sign that the small caps are willing to come and play the game. And if the small caps are playing the game, that's good news, because it means the market is being led. Remember, small caps dropped to a low on the 12th of May. If you compare that with the US 500, 12th of May is here. SPY and Nasdaq, in fact, both went to new lows. And this is the exact same philosophy that we used previously with the lows as well. If you think about it, US 2000 barely got to a new low after that initial crash that occurred through the 28th of Jan, and then started the recovery, and then started the heavy recovery. So the small caps have been recovering way faster than the rest of the market. It's happening here again. So we do want to see this continue to hold up. Tom, look at Google run. Yeah, 3.63. Very nice. Good breakout. Cool. Next stop, what? 2460, 2450. I like Google. You know, it's my second favorite stock. My first favorite is Microsoft. However, Microsoft's being a bit of a dog. Look at it. Doing this little... But these aren't trades, okay? In terms of the way I like them. QCOM, yeah, semiconductors in general. Just look at SMH. Semiconductors in general showing some signs of life. QCOM, I'll just bring it up before we end up here. Thank you very much. Still 700 people holding around. Filled, and then it's come back down. But in general, semiconductors are showing some signs of life. And at this stage, looks okay. Amazon chart updated. Yes, it is. Fantastic. Still got that big gap. Still doing pretty strong for today's number so far. Very likely he'll pull out of Twitter, but don't expect that money going back into Tesla. I would look, if I was Elon, and I'm sure this is, you might disagree, but I think he'll use the money for other things. I think that might have been his plan all along. I don't know. It's not like he didn't even know. He already knew that they had tons of bots on Twitter. I mean, everyone knew that. So it's a pretty good excuse. But to be able to liquidate and use cash for something else, I mean, he has greater plans than just Tesla, doesn't he? I thought he wanted to get us all on Mars so we can become Star Trek or something. Appreciate that. Thank you very much. We do the lives every Monday, so you can always subscribe. Monday open, where we're doing the lives at the moment. It's much easier for me to keep it up as well. You got to remember it's 12:20 a.m. So it's it's getting to the wee hours. Look, I love the American market. It's the best market in the world. Don't get me wrong, but yeah, the old YouTube doesn't like live streams. We still do live streams Tuesday, Wednesday, Thursday, and usually a little bit of Friday. But if you're interested, you can join the 7-day free trial and do the privates. They get a little bit more intense. Obviously, we go 15 minutes crazy, 20 minutes crazy, talk about some general stocks after that, and a bit more in depth than that, actually. 10-year almost at 3%. Yeah, not necessarily a great thing. The more this 10-year rises, the more chance that the bears will end up getting to smash this market down. Kind of proves that 4,300 as well. Like, again, if that happens, it's not necessarily a good thing. All right. Catch everybody. Have a great day. Good luck. And we'll see you tomorrow for another video. Remember to subscribe, smash the like button. Catch you for now. Bye.